welcome back to another video. In today's video I'm going to be going over the 1 minute trading strategy version 3. We already have 2 versions up on the channel, and this is the most up-to-date current version of the strategy. A few things have changed in terms of automating it. It's now a very automated strategy. We've also added a few more tools in, so yeah, hopefully you guys enjoy this. If you do, hit the like button. If you're new here, hit the subscribe button, because we do a live stream every single day where we do trade, we do topic streams, we do actual live trading streams, and obviously we put videos up on the weekend like this one. If you're looking for all of the indicators that I'll be using in this strategy, go into the description down below, click on the Patreon link, and it is silver plus. So anything past silver, you'll be able to have a look at and yeah, get access to all the indicators and everything like that. To trade it the exact same way that I do. But yeah, now let's get into everything. So what indicators are we using? We're using 4 indicators, and we're using 1 expert advisor. We're using pivot points, which are these arrows. It does look a little bit weird, but I think that's because it's on the weekend. This also shows the time, so when the markets are moving, you'll be able to see the time left on the current candle, and also the what size pip that candle is. We also have a 78 moving average. This is the green line here that you'll be using to get your the go-ahead for the trades almost. We'll get into the strategy in a bit. If you've seen version 1 and version 2, this is going to help a lot. So if you haven't, then yeah, maybe go back, watch those, but I will be covering everything in this video anyway. We then have session times. For this is going to be changing, but for me personally and anyone in the UK, this is going to be trading between 1:45 and 3 PM. Now you can extend this an hour back and an hour forward, so you could do, for example, 1 PM till 4 PM if you wanted to, but right now I'm just doing 1:45 till 3, just to reduce the time that I'm actually trading. And the new kind of indicator that we're going to be using, the one that isn't in the other videos, is the ATR bias. Now it's called the ATR bias, but really it's just the trend bias, and all it does is it basically tells us what the trend is doing on each time frame. So we have the 4-hour, the hourly, the 15-minute, and the 5-minute, and whenever we get this, when all 4 are going in the same direction, we have a really strong bias. If we have 3, we can still take a trade. If we have 2, we can't take a trade. Obviously we'll get into that in a little bit, but the next thing is the trade panel. So that's this little thing up here, and it's basically an automation tool that we've created here at Trade Happy that enables you guys to open trades with a set risk, a max lot. It automatically does the candle size for you for the stop loss and the TP. You can use break evens on this automatically. You can do partial closes automatically using this. It's just perfect for the 1 minute strategy. So we're also using that. Of course, you can get all of these things on Patreon. So if you are looking to trade the exact same way that I am, or get access to the trade panel, then you'll have to go to Patreon and click on the link through the description. So the overview for the strategy is pretty much a trend-based 1 minute strategy. So you're trading it only on the 1 minute. You don't need to look at any of the time frames, and all we're looking for is this kind of movement here. Okay, well, yeah, kind of, or something like this. Okay, either of these. And when you're trading this, when you see the market do something like this, you're going to be drawing a line like this, and when we get a touch point, or when the market comes down and down a little bit more, you'll be then looking for an entry candle like this and like this to then take a buy on this, and you will need the 78 EMA to be above, or below, sorry, you need price action to be above the 78 EMA. So once you get that, and 3 of these are in the same direction, so you know, it could be any of these in any order, then you have the go ahead to take a buy. If you are kind of a little bit lost, we'll go over some examples and all that kind of stuff, but basically this is the simple format that you're looking for. You're looking for a break of this level, you're looking for a retest, and then you're looking for an entry candle. Pretty simple, to be honest with you. So we'll get rid of that, and we can scroll back a little bit. Actually, what I'll do is, so this was a trade that we had, when was it? I think it was Friday, right? Yeah, Friday. So this was a Friday trade. It was a losing trade. Let me zoom in a little bit. Okay, I hope you can see that. So I'm just going to draw back over the chart, which is basically what you'll be looking for. So you see the move up, you see the move back, the move up, the retest, and then the entry candle. Okay, we're above the EMA, and I think 3 out of the 4, or 4 out of the 4, I can't remember exactly, we're in the same direction on the bias indicator as well. So we opened the trade here when we got the entry candle. You know, that's a very nice entry candle. And I do actually, in yesterday's video, go over this trade and review this trade. So if you are interested in a more detailed look around why this trade didn't work, then go on to the previous video from yesterday and you can have a little look at that. Yeah, that's basically the thing that we're looking for, okay? And that is actually a live trade example that we took. Stop losses here, entries here, and the TP was way up there, 3 to 1. So the difference between version 2 and version 3 are 2 main differences, okay? The difference one is this, the trend indicator, and also this. In version 2, you don't have this at all, and in version 2, you have to do the calculations yourself, you have to work out the stop loss yourself, the TP yourself, and the risk yourself. So yeah, those are the kind of main differences between version 2 and version 3. Obviously, if you want to trade version 3, you can do you know, version 2 and version 3. There's not a massive difference. The only difference is automation and the adding of this indicator here. That's really it, okay? If you wanted to trade version 2, you could do, but obviously if you are looking for a more automated strategy, then version 3 is going to be better for you. So the pairs that we're going to be trading are similar to previous strategies. It's going to be GBP USD and GBP JPY. We added GBP JPY to give us an edge when it comes to the differences in the way that the pairs move. So GU and GJ obviously move quite similar, but sometimes you'll get a setup on GJ, sometimes you won't get a setup on GU, and vice versa as well. So it just gives you more trades. Obviously you don't have to trade GJ. If you want to trade the classic version almost, then you could just trade GBP USD, and that would be perfectly fine. We've taken a trade on both, and both have lost so far, so we've taken 2 trades, 2 losers. So yeah, not really much comparison there at the moment. But obviously as we trade it, you'll be able to see the different kind of variants of that. So how does everything work together, right? How does everything work together? You'll be using the 78 EMA as a really simple bias for your entries, okay? So if we're above the 78 EMA, you're looking for longs, and if we're below, you're looking for shorts. That's it. That's all you're doing with the EMA, right? That's all you're doing. With this, you need 3 of these to be going in the same direction. Doesn't matter what, it could be the 5, the 1, and the 4. Those could be going in the same direction, that is fine. Okay, you just need 3 to be going in the same direction, up or down. Obviously, if we're below the EMA, and all of these are going up, you don't have a trade. If you're above the EMA and all of these are down, you don't have a trade as well. So these 2 things need to be the same, and they need to be going in the same direction, okay? So once you've got those 2 things, you're then looking for the break, the retest, and the entry candle. The entry candle needs to be bigger than 2 pips. Okay, it needs to be bigger than 2 pips. If it's not bigger than 2 pips, you can't take the trade. The reason for this is because the stop loss will be way too small and you'll just get tagged out super fast. So with a candle size of 2 pips, that means that your stop loss has to be a minimum of 4 pips. Now obviously you can go higher than this if you want to, but with our testing, 4 pips has been kind of a good starting range for that. So in terms of the overall basics, you've kind of got the foundations now. Some of the big things that do make it, or the small things I guess, that make a difference are, well, especially the entry candle, okay, especially the entry candle. You need, really, for the maximum kind of percentage wins, you need your candle, your entry candle, to be no bigger than 5 pips, okay? If it's bigger than 5 pips, the win rate drops, and if it's smaller than 4 or 2 pips, the win rate drops as well. So between 2 and 5 pips is a really good place. Now you can take trades that are bigger than 5 pips, but obviously the win rate does go down. It doesn't go down enough that it's not worth taking the trades, but it's just something to keep in mind if you want to be taking the kind of super high win rate trades. Something else that does affect the win rate is timing. So if you're trading this in London, you're going to have around a 40 to a 45% win rate, and if you're trading this in New York, you could be looking at between a 45 and a 50% win rate. So that's something else to keep in mind. Obviously not everyone can trade New York only, so yeah, keep that in mind when you're trading. Obviously if you're trading this where you might not be able to trade New York, you might want to tweak the strategy a little bit. I'm not sure. You can do your testing on that, obviously. Something else that really does affect it is, if we look at this example here, and I'll just put a line on here. Once we break this high, the next candle after this, if it doesn't touch that green line, that increases the win rate, okay? So I call this a gap. So we want to see a little bit of a gap in here before we get the retest, okay? Now if this was to come down and touch this, there wouldn't be any gap, okay? You need a little bit of a gap in here, or kind of white space, I guess, to give you a good move higher and then a nice retest. This does make a difference. Yeah, so that is also something that you should be looking out for when trading this strategy. Also, with the EMA, as you can see on this one, we're basically going sideways. Obviously we can't see that when we're trading it, because all we're seeing is this, okay, and then we take the trade. This could have easily gone like this, and it would have looked like a trending market. So if the EMA is flat, okay, that is obviously going to affect the trade. Now it's very easy to look back and say don't take a trade there because the EMA is flat. When you're looking at the markets, you need to think about the future, right? You need to think about the future. So if this went like this, for example, would you say that this little period in here is a flat market? Some of you would, some of you wouldn't. You know, it's just one of those things. When you are trading it, you'll be able to decide, you know, is it too flat to take a trade, or am I only going to be looking for markets like this, right? That's something that you're going to have to decide on. But it does affect the win rate, so, you know, that is a small difference that you're going to have to think about. So in terms of entry, scaling out, break even, all that kind of stuff, we enter, or currently, we enter with a 0.2% risk per trade, and we scale out at 1.5. So we take 33% off at 1.5 risk reward, and then we also move to break even. Move to break even. That's a weird break even, but you know what I mean. At 2 risk reward. Okay, so this is some trade management to help you guys on with one, scaling out of the position to get profits, and 2, to help with your psychology. Because when we weren't, so in version 1 and 2, there's no scaling out, there's no moving to break even, and we found that it would get to 2 to 1 a lot of the times and reverse. Whereas with this one, if we get to 2 to 1, we've secured 33% of the position, and we've moved to break even, which is a great thing for psychology. So obviously you don't have to do that as well, but that is something that we're doing in version 3 as well. So it's moving this thing into being a more complex strategy than version 1 and 2. So if you are looking for something more complex, then version 3 is probably going to be a better option for you. So yeah, if you have any questions, let me know. If I've missed anything, go into the comments, let me know, and I can answer any questions. If you want to go on to version 2 and watch that video again, then you can do, because I do, you know, I'm expecting that you know a little bit about it. Obviously you might not know a lot, but yeah, go back onto version 2, you can watch that. But yeah, if you have any questions, let me know. It's a very simple strategy. A lot of traders overcomplicate this. Keep it simple, okay? Keep it simple. There's no you know, if this happens, then don't do this. If this happens, then do this. Keep it super simple. Trade it your way, right? Change the strategy a little bit, make it your own. And yeah, best of luck in your trading. Stay disciplined, and I hope to see you in the live streams in the future. So hit the like button if you've enjoyed this video, and I will see you in the next one.